Hey, how's it going? So I'm sure you just clicked on this Silver Slayer video expecting to hear Silver Slayer's voice. I'm sure you're looking forward to hearing him talk about this topic today. But instead, you get to listen to me, Matt, for my YouTube channel, Silver Fortune. Today, Silver Slayer and I are doing a sort of exchange program or a collaboration where I'm creating a video for him to publish on his channel, and he's doing the same for me. So if you wanted to see the one that he made for my channel, there's a link below in the description to my channel, and you can go and check that out. Silver Slayer and I, our channels, and he and I think we have a lot in common. I mean, we're both relatively young for silver stackers. I mean, silver stackers tend to be an older population, right? But it is encouraging that I see a lot of younger stackers out there. It's very encouraging for me to see that. We're both very passionate about silver, and it's really, the main focus of our channels. And we have fairly successful YouTube channels, but what we cover on our YouTube channels, there's not a ton of overlap. Besides that, we both talk about silver, right? Those of you that are his fans, I mean, if you're watching this video, you probably are. You know that Silver Slayer talks a lot about coins, about numismatics, semi-numismatics, what he's buying, whatever package he's opening. He talks about stacking strategies. He talks a lot about that, right? Kind of the ins and outs of just buying silver. And of course, he talks about cryptocurrencies. He's talked about the uses for silver, the true value of silver, and the true nature of fiat currencies and the dollar. But mostly what he sticks to is just stacking strategies, right? And you won't hear a lot of that on my channel. Maybe back in the day I covered that a little bit more, but most of what I talk about today is kind of the broader look on the world. I talk a lot about the silver market, right? I also talk about other markets. I talk about the economies of the world. I talk about geopolitics, domestic politics here in the United States. But I don't talk a lot about stacking. I don't talk a lot about just buying silver, what you should and shouldn't buy, because I'll be honest, I'm not super knowledgeable about the best coins to buy or anything like that. It's just not a huge interest of mine. Not that there's anything wrong with what Silver Slayer puts out. I just kind of chose to went a different direction with my channel. And so we both kind of agreed that it'd be cool to exchange videos, right? So we have a lot in common, but there's not a huge intersection in our content. And what he actually specifically asked me to cover was silver price manipulation, because it's a huge thing in the silver community. I mean, it's a big part of why we got into silver, because we believe that silver's undervalued and that it's being manipulated down. And it's a topic that he just hasn't covered as much, and he would prefer that I did. And it's something I love to talk about. I talk about it plenty on my channel. And so, yeah, I was more than happy to do that for him. And I'm titling this video, The True Nature of Silver Manipulation. Okay? And I wanted to get into kind of the broader topic of it. I'm not going to go really deep into this topic because, I've made dozens of videos on it probably by now. At least a dozen, I'm sure. It's a very complex topic, but I just kind of want to cover it on a broader sense and kind of talk about some misconceptions about this manipulation. Because what I see from stackers is that a lot of stackers only acknowledge or understand one half of this silver price manipulation, right? The silver price suppression. And that's the paper market. But there's a much more important, in my opinion, much more important and long-term strategy to suppressing the price of silver. And I'll get to that in a second. But first, I want to talk about paper market, the COMEX or whatever market you're talking about, the suppression of the price of silver using paper silver or using the markets. And many of you guys probably already understand how this works, but it's a very effective way to suppress the price of silver. It's an effective way to raise the price of silver. A lot of people forget that a lot of the price rise, or the rise in the price of silver back before silver hit its high in 2011 was manipulation, right? Banks or these large institutions were manipulating the price of silver higher, right? And so it's not always that the paper markets are manipulating the price of silver downwards. They do it both ways because they want to make money on it. But don't get me wrong, as a whole, they tend to manipulate it downwards, right? That's when we see the flash crashes. That's when we see all that happen. And it really is a phony market. It's a paper market that trades a physical asset in theory, but it's mostly just a paper market, right? There was a flash crash something like a month ago now, roughly, where essentially 50 million ounces of silver were sold off in like a minute or two, if it was even that long. Maybe it was a couple seconds. And to put that in context, that's roughly 1/20th of the yearly production of silver, 50 million ounces. That is a huge amount of silver, and it might have been slightly less than that, slightly more, but that's a huge amount of silver. There is probably not that much silver in any one place in the entire world, okay? It's just a phony market, and that's all paper silver that they're selling. And they use the futures market, they use exchanges like the COMEX, etc., to keep the price down, right? And one of the benefits to doing that is discouraging investment in silver. If you are, say, a silver investor, a stacker, especially a paper investor, you're not very likely to go long on silver if these flash crashes keep happening, if it just keeps getting pounded down for no real reason. And that's what we see with silver, day in and day out. It goes up, might rise to $16, $17, $18, $19 an ounce, and then just goes back down again, even though its real value should be much, much higher. But, I could go on talking about the paper market, but I'm sure most of you guys kind of have a solid grasp of how that works. And to be honest, you don't need a complete understanding. I don't have a complete understanding of the in and outs of how the paper market manipulation works, because it's very complicated. A lot of it is run on high frequency trading, these algorithms where like I said, those 50 million ounces that were sold in a matter of seconds, maybe it was by one buyer or one seller, but more than likely it was just a bunch of algorithms. They saw the price drop, and so they dumped their silver. Or maybe it had to do with a lot of stop loss orders at a certain price, and so they forced the price down through those stop loss orders, and all the silver is dumped into the market. But the point I'm making is that a lot of this is traded by computers these days, and of course these computers oftentimes are run by big banks, or we can put on our tinfoil hats, and maybe central banks have a hand in this as well. I think it's very likely that they do. I think there's a lot of proof to prove that they do have a hand in this paper manipulation. But it's a very complex topic. I'm not going to get too much into it, but it happens. With that being said, I remember when I was first introduced to the idea of paper market manipulation, and I completely understand how it's a sustainable thing for a lot of other assets, a lot of other paper assets. I'm talking stocks or bonds or fiat currencies or interest rates or what have you. This manipulation is sustainable oftentimes because we're dealing with a paper asset, and so you can always just create more of that, right? But when we're talking about silver, there are real world effects of keeping the price so low. I mean, at some point, the price is too low, and mines stop producing silver because they can't make money off of it. Maybe demand would increase because it's so low and people see it as a bargain, especially the physical silver that's being bought up by investors in China or India or Russia or just stackers elsewhere in the world. At some point, it's not sustainable to suppress the price of a physical asset, and that's what I thought to myself. I saw this paper market manipulation, and I totally saw where it was happening, right? It's obvious to me that this was occurring, but I didn't understand how it could be so sustainable for years at a time, or even a decade plus. How come there wasn't some sort of massive shortage of silver? How come the physical fundamentals, the supply and demand fundamentals of silver hadn't corrected itself? And so I dug deeper, and I came to understand the second half of this market manipulation, this price suppression of silver. And what I'm talking about is basically a long term. I'm talking decades. This is going back to the 50s or the 60s. A decades-long dumping of silver onto the physical market. Governments around the world, including the United States, China, India, a lot of European countries, they used to back their currencies with silver, right? Or they actually had circulating silver coinage. But in the last couple of decades, they've been slowly selling that silver. They've been essentially dumping physical silver onto the market. And this has the effect of silver price suppression. It hasn't always been done with malevolent intent. Maybe these countries are just making the ill-informed decision to sell their reserves of silver onto the market because they're hard up for cash. But it's the fact. It's what's happened. I mean, if you go back into the 1940s, 1950s, there were tens of billions of ounces of silver, by many estimates, in government reserves in these vaults somewhere. And today, there's less than 100 million ounces in these government reserves. To put that in perspective, that's something like a month's worth of world physical silver production. That's a very small amount compared to what it was decades ago. And like I said, this has the effect of suppressing the price of silver. What's happening is that the supply on the whole supply and demand equation is being increased, right, by 50 million ounces a year, 100 million ounces a year for decades, right? And a lot of the silver is either being bought up by investors, by by stackers or whatever, or it's just being used up altogether in industrial uses. And oftentimes we know that industrial uses for silver, it's not easy to recover the silver from those uses, right? And so what we see today and what we've seen for decades now is what I call a physical supply and demand deficit. And so what I mean is that I'll use, for an example, 1 year the mining and the scrap production of silver is 900 million ounces of silver, okay? But the actual demand for silver that year was 1 billion ounces of silver. And so there's a deficit there of roughly 100 million ounces of silver. Where does that deficit come from, right? It's got to come from somewhere, and where it's come from for decades now is above ground reserves, vaults, usually government vaults. They've sold this silver onto the market, and it's made up that gap. But like I said, these reserves have basically been drained, and today they're basically empty, and we still have this deficit problem. I mean, this deficit problem not only has the effect of draining these above ground reserves, but it also means that mines haven't kept up with actual demand for silver, right? Like I said, they've been, year after year, they have not been meeting actual demand for silver because that demand is partially being made up by the silver being dumped onto the market. And so this is going to have a lot of long-term consequences on the price of silver. This suppression is essentially like a rubber band that has been stretched and stretched for decades now, and eventually it's going to snap. Eventually, these above ground reserves, wherever they're coming from today, I suspect probably large institutional investors, it's going to snap, and that supply is going to run out. And what do we have then? We have probably a silver shortage for a short period of time, and then we're going to see a very large increase in the price of silver. And that's something like that could definitely happen if the paper market were to fall apart, right? If there was a scramble for physical silver rather than the paper asset. But I think it's more likely that we're going to see a run up in the price of silver because of a physical shortage. Essentially, these reserves are going to run out, and the demand is going to vastly exceed the actual supply of silver on the market. And that's what I'm looking forward to. These reserves have been drained. U.S. drained most of their reserves prior to the year 2000. In between the year 2000 and 2010, it was mostly India and China. And since then, I'm not quite sure where this silver is coming from, but I know that more and more silver is being bought up by private investors. More and more silver is being used up in industrial uses. The above ground supply of silver is dwindling, these reserves, and eventually there's going to be a supply crisis. It's not going to be able to meet demand, and that's when we're going to see a very large run up in the price of silver. There's plenty of other catalysts that might cause a rise in the price of silver, but this is one that I rarely hear talked about in the stacking community. Everybody loves to talk about the phony markets, and don't get me wrong, those are huge, and they totally are phony, but this physical suppression of silver by the dumping of silver onto the market, I would say, is even more important because it's what has kept the price of silver so low for so long. It's very important to understand, and I think eventually it's going to come to an end, and it's going to pay off for those of us that have been investing in silver and gold in the meantime, especially silver. And keep in mind, silver stackers, we have a role in this whole plan here, in this whole this scheme to suppress the price of silver. Essentially, the more silver that we buy, the more these above ground reserves are being drained, right? Demand by stackers around the world for silver is a big part of silver demand. It's very variable. It goes up and down a lot each year based on investor sentiment, based on the price of silver. And eventually, I think if we just continue to accumulate ounces, eventually we're going to break this market. The physical supply is just not going to be able to meet demand. We're going to see silver shortages. We're going to see that $20, $50, $100 silver that everybody's always been talking about forever. Of course, once we get there, it's hard to say how sustainable that will be, because you and I both would probably be looking to sell silver at that point. Maybe not. Maybe this would be coinciding with a collapse of fiat currencies. There's a whole lot of variables at work here, but this is something I definitely don't see talked about enough in the silver community. I know I'm rambling here, so I'll wrap it up. But it's something that I want to talk about. Definitely something I want to share with you guys, because that really is the truth about the true nature of silver manipulation. It's just as much the physical dumping of silver onto the market as it is the paper markets manipulating the price of silver down. Once again, for sure, check out my channel if you haven't already. I know Silver Slayer and I have a lot of overlapping subscribers and fans. I see a lot of you guys commenting on his videos, but let us know what you think of this video. I think it's a silver community first. Maybe we'll be setting a trend here, maybe not. But let us know down below in the comments what you think of this video and what you think of this idea of this collaboration. And as always, thank you for watching.